Welcome to Bears in Exile. Today is Monday, September 24th, and this is the market overview, looking at the Dow and, well, actually a whole bunch of things tonight. Alright, so, we've been waiting and watching and waiting to see if there would be a downtick or if this would be consolidation before a breakout to the upside, courtesy of Ben and his printing press. Well, today they finally did it. They finally got the downtick today. I wasn't really a believer, just skeptical until that happened. And today, most certainly, downtick. You could look at this and say, oh, this is still just consolidation, and yeah, perhaps it could be certainly working itself off in the heat map. But I've got to respect that it is a downtick and follow the rules, and according to those, we have a target of 13,460. So around about 100 points down from where we are now. That'd be pretty nice. And as a matter of fact, it's really not the end of the world, because even with a bubble corrective move of 100 points, it still does not exceed the halfway point of the big green candle. And that'd be very, very healthy. So, we'll see if that happens. We do have the stochastics moving down slightly, the CCI moving down, the histogram moving down, and the MACD moving down. 14-day RSI moving average still moving up, which is kind of the wild card in all of this. And although it is high, I mean, if we zoom out, it's high. So a little bit difficult in that this could be a secondary reset where we get lower stochastics before they turn around and go back up to meet the 14-day and hold high. So 100 points to the downside, that would be the target, and we'll see if that plays out, but certainly more than possible considering all of the alignments that we have. Now, one thing I've seen online on different sites, Market Watch, some other places, they keep talking about Dow theory. They talk about it on, I think Zero Hedge had a story about it, in that the Dow Jones transports, lead the market. And the last week, they have been just bashed over the head, and today catching a good bid and moving on up, recovering almost everything from Friday. So, is this overdone? Is this overdone to where it can go back up and take the Dow and SPX with it? Well, today is a good start. Bottoming area in the heat map. 14-day RSI moving average still moving down. Stochastics getting low and losing momentum. CCI already turning up. RSI turning up. The MACD losing momentum. MACD histogram still clicking down. But overall, in the daily, it looks like this may be ready. It does not have an uptick yet. You can see that very clearly. You can see that we do have excessive separation. So we know that there is a bubble here which needs to be fixed. We do have a crossover of the long-term moving average bar. So going up here just for a retest of the lower price consensus level, or even of the long-term moving average bar, which is very close to the major price consensus level for this month, would that drag the Dow and SPX up? It could. It could be a contributing factor. The point being, just trying to take into account all kinds of different theories that people have, because some are right, some are wrong. Might as well examine as many as we can. And looking at SPX, this is just like the Dow. We got a downtick today. Downtick gives a target of, very clean, 1448. almost 10 points down from where it is now, and a bubble corrective move of that sort would be right about the halfway point, maybe even just shy of the big green candle. It's very interesting. You have the stochastics moving down, CCI moving down, RSI moving down, MACD moving down, histogram moving down, only the 14-day RSI moving average moving up. Daily does not look good, and now we have a downtick, so it can be believed. Did call out in the daily running thread today when we were at or near our lows that the market would get bought, and it did. It rallied up to almost the highs of the day, and then crapped out towards the end of the day, which was pretty, matter of fact, we can see that. Yeah, it was somewhere down here, and then it went up to its highs, made a new high for the day, and then crapped out. So that was pretty cool, but nonetheless, matter of fact, I should look at that, shouldn't I? 60-minute time frame. We can see the big drop at the open, continuing the selling from Friday, and from there, essentially moved up most of the day, and then give a lot of it back. Beyond that, stochastics moving up, 14-day RSI moving average moving up, histogram sloping up, MACD holding low, RSI going down, CCI going down by the end of the day. 60-minute pretty wishy-washy. And you can look at this and say, oh, we have higher lows. That very well may be. But we do have a downtick today. Just have to take notice of it. And not TNA. The VIX. Out of order. So looking for a tell with the VIX. We know that the 14-day RSI moving average has been high and that has turned over, but yet the VIX keeps attempting a test of the long-term moving average bar, falling shy every time it attempts to do so. Beyond that, we have a low which has not been retested yet. It keeps trying. It always falls short. We have ascending lows. We closed below the lower price consensus level today. We got an uptick today. It was resolved intraday. We have to see what it wants to do next. But whatever bubble was here, it's fixed. So does that clear the way for a retest of the low? Question mark. Well, it would appear that we have a secondary reset underway. Stochastics moving up, CCI moving up, RSI moving down, histogram sloping up, MACD going sideways. Looks pretty good for a secondary reset. And if it's able to really catch a bid, I would assume a revert to the major price consensus level at 15.5. But we did close below the lower price consensus level today. That is a bearish sign. And at some point, everything is going to get into alignment with the 14-day, and it will probably go lower. All that news out of Europe just wasn't a good recipe for going up today in the overall market. And TNA, the small caps. Well, essentially a doji star today. Have to kind of blow it up for it to look like that. But either that or it's a high wave doji. Beyond that, we have another downtick today. Gives us a target of 64. And yeah, that one seems very likely to complete. This original one, 1, 2, 3, 4, ran out today and was unable to complete, just shy of 63. And that in itself, yeah, kind of bullish, but a lot of times, even when they're late, these tend to fulfill themselves. So we'll be waiting to see if that happens. But beyond that, 14-day RSI moving average still moving up, stochastics moving down, CCI moving down, RSI moving down, looking for a bearish cross on the MACD. MACD histogram moving down. Does not look good in the daily time frame, and with a new downtick, yeah, we should have some more to the downside on the small caps. UUP, the dollar, very important. Oh yes, And every time it keeps trying to go up, it keeps getting swatted down intraday. But it is making higher recent highs on the attempts, higher recent lows on the lower attempts. We still have not resolved any of the upticks. This one expiring. This one expiring today. Let me see. 1, 2, 3, 4. Yep, that one expiring today at for 22. And the more recent one at 21.9, coming really, really close today, but falling just a little bit short. CCI moving up, stochastics moving up, RSI moving up, histogram moving up, and MACD looking for a bullish cross. Does not look bad in the daily. GLD. Oh yes. Getting a downtick today. And right about 169.5. Not far from where it is at the moment. 14-day RSI moving average, first downtick today. That is a definitely a warning sign that this sucker is going to be going down some. Down on the CCI, the stochastics, the RSI, the MACD histogram. GLD does not look good in the daily time frame, and we have a new downtick. So, can expect more with that. And that lines up with UUP quite nicely. All kinds of downticks today. Matter of fact, looking at FXE, the euro, talked about going way back all through here with these downticks, that a retest of the 200-day moving average would be natural. It certainly appears to be on its way. Spinning top today. Getting another downtick, which is resolved today. 14-day RSI moving average not turning yet. Down on the CCI, down on the stochastics, down on the RSI, down on the MACD, down on the MACD histogram. Seems awful natural that the 200-day will be retested just shy of 127.8. And Comp Q, the NASDAQ. Yep, it's happening everywhere. Another downtick today. It was resolved today. Pretty cool. We had this ultra slight one from a few days back. That one has not been met at 31.40, but it is not far away, and we still have time. We still have 2 days to resolve that one. Beyond that, CCI moving down, 14-day RSI moving average moving down, stochastics moving down, RSI moving down, MACD looking for a bearish cross, MACD histogram moving down. Looks bad in the daily. Doesn't mean it can be has to be a straight shot. 60-minute time frame of the NASDAQ Comp Q. Have this ascending line essentially, and a bottoming area. You can see the 14-day RSI moving average leveling out, not pointing down. Stochastics up, CCI ticking down, RSI ticking down, MACD histogram slanting up, MACD not turning yet. Not terrible in the 60-minute time frame, so we can have a bit of a bump before resolving the rest of it to the downside. And that's how it is all over the place on many things. And Apple. Check this out. We had the downtick ultra slight from a few days ago. Kind of didn't want to count it, but it was a slight downtick. It was resolved today. Bubble is fixed. Beyond that, even if we didn't count it with a downtick today, it was resolved intraday. So this bubble is fixed. It came down. It completely filled the gap from back here on the 13th. And we've been watching the 14-day RSI moving average. It's been moving down for a while now. Finally, having impact in the price. Down on the CCI, down on the stochastics, down on the RSI, looking for a completion of a bearish cross on the MACD. Down on the MACD histogram, does not look good in the daily time frame. We have to see what it wants to do next, but the logical place at this point would be the long-term moving average bar for a retest, currently at the 670 area. Beyond that is the major price consensus level right here about the 663 area, but nonetheless not looking great. And GE, talked about this one being stronger, not showing any weakness. A good indication for the Dow. Today it got a downtick. Downtick takes us right down to 22 even. You can see the stochastics rolling over, CCI rolling over, RSI going up, histogram getting a move down, MACD ticking down, 14-day RSI moving average still pointing up along with the RSI, but overall definitely more negative than positive, and we have a downtick. So 36 cents to the downside, and then we'll see if it wants to do a bar retest or not. And JP Morgan, most important bank, very interesting. Strong day for JP Morgan. We had the downtick on Friday. That has not resolved itself. 14-day RSI moving average still moving up. Stochastics moving down. CCI moving down. RSI moving up. MACD moving down. MACD histogram moving down. Not much farther to go for a bubble corrective move. But this one is holding as a possible consolidation area. But wow, I mean, look at that, the opening, the big gap down. Not a good sign. Not a good sign. Almost making a new recent low today, but not quite. Still a little bit concerning. And XLF, the financials, the banks as a whole. We had the downtick back here. Today was its fourth day. 1, 2, 3, 4. And it took 4 days for it to resolve. But it did. So that's another successful downtick. You have the 14-day RSI moving average holding high, going sideways. Stochastics moving down. CCI moving down. RSI moving sideways. Bearish cross on the MACD. Down on the MACD histogram. This bubble corrective move is finished. We have to see what it wants to do next. But all things considered, not a bad day for the banks as a whole. Essentially unchanged from Friday. And USO, oil. Yep, this one looks not good. New recent low, bearish. It is a hammer. That is a possible reversal candle. 14-day RSI moving average moving down. Stochastics holding low. CCI moving down. RSI going sideways. Down on the MACD. Down on the MACD histogram. Except for the candle, it looks pretty darn bad. Where would this go to the downside if this is not a reversal candle that plays out? I would assume you can see the upper price consensus level from the previous month. That's what it came down and almost kissed today. So it would seem natural to me for it to come down, fill this gap right here from the previous month, and perhaps hit the major price consensus level from the previous month as well. Just over $1 from where it is now, and if it's just a gap fill, then about 75 cents. Needless to say, either one of those would be bad for the market. And let's see, is there anything else that we need to examine? No, I think that's about it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.